Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have here is, what is going concern concept? So going concern concept is an accounting concept which assumes that the business will go on forever. As the name suggests, going concern. So in this concept, it is assumed that the business will not stop, or it will not stop in a very recently or in the near future. So as by the definition, the going concern concept assumes that the business will continue to operate for a long period of time in the future and is not likely to be closed or sold in the near future. It is because of the going concern concept that assets are recorded in historical cost. In the books of accounts, the assets are recorded with the amount when it was bought. So that is, we call this historical cost. And why do we record in historical cost? Because of the going concern concept. Again, depreciation is calculated based on expected useful life of assets because again of the going concern concept. Prepaid expenses, that is expenses paid in advance, accrued incomes yet to be received by the business, and deferred revenues, that is revenues that is postponed for later. These are recognized. Why? Because again of the going concern concept. So this was the concept of going concern. One example of going concern concept we have is, if a company buys machinery worth rupees 10 lakh under the going concern concept, it is assumed that the machinery will be used for several years. Because what does the going concern concept says? That the business will go on forever. So that is why depreciation is charged annually and not the full cost is charged immediately. So a part of that amount is charged annually. Why? Because of the going concern concept. So if the company were not a going concern, assets would be valued at realizable value and depreciation would not be relevant. It is because of going concern concept, depreciation is charged annually and the assets are recorded in historical cost. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. The question that we have here is, what is suspense account? So what is a suspense account? It is an account that is prepared when the trial balance does not tally. So when the accountant prepares a trial balance at the end of the accounting period, due to certain reasons, if this trial balance does not tally, that is when the debit side and the credit side does not match, then the accountant prepares this temporary account so that he can maintain it till he realizes the mistake or investigates the mistake. So suspend account is open when trial balance does not tally and the difference is temporarily put in this account until the errors are located and corrected. It is again a temporary account and it helps maintain the trial balance. So what is a suspense account? It is basically a temporary parking place for errors and unknowns. And one thing that we have to remember while preparing is that it has to be closed. It must be closed when the errors are located or detected. So one example of suspense account is difference when there is a difference in trial balance. So suppose the debit side of the trial balance totals 50,000 and the credit side totals 49,500. So on the debit side, so trial balance somehow looks like this. So if the debit side is 50,000 rupees and the credit side is 49,500, there is a less amount of 500 rupees. So of that 500, the accountant will prepare a suspense account to tally it, that is to make both the sides equal. So that is what we call is telling the trial balance. So the difference of 500 is placed in the suspense account. This 500 will be written as suspense account. So later, if the mistake discovered is that the purchase account is undercast, that is 500 rupees is not being recorded in the purchase account. So later what the accountant will do, he or she will debit 500 rupees in the purchase account and he will credit the suspense account to rectify that mistakes. So this was the example of the suspense account prepared when there is a difference in trial balance. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. The question that we have here is, briefly explain any three limitations of GAAP. Before going to the limitations, we will know what is GAAP, or the generally accepted accounting principles. And what are these? These are the rules and regulations or standard guidelines that the accountants follow while preparing accounts. So by definition, GAAP or the generally accepted accounting principles are standardized rules and guidelines that ensures consistency, transparency and comparability in financial reporting. They provide the framework for preparing financial statements and are set by Financial Accounting Standards Board. So what are the GAAP? They are the rules and regulations followed while preparing accounts, and what they do, they ensure consistency, transparency and comparability in the financial information. So the three limitations of the generally accepted accounting principles are there the difference of interpretations, because again there are various methods of accounting in accountings. For example, depreciation, there are various depreciation methods or inventory valuation methods. So what does it do? It creates difference in interpretation, so it becomes one limitation of the generally accepted accounting principles. The next is that the generally accepted accounting principles ignores qualitative characters like the employee morale, brand reputation, customer loyalty. So this becomes another limitation. The next limitation is historical cost principle. Because assets are recorded in historical cost, the actual value of the asset is ignored. So this becomes a limitation of the generally accepted accounting principles. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. The question that we have is, briefly explain any three qualitative characteristics of accounting information. Before moving to the qualitative characteristics, we will know what is accounting information. Accounting information is nothing but the output of the accounting process. So it is the output of the accounting system. And what does it include? It includes the financial statements, that is the profit and loss account, the balance sheet, the cash flow statement, all the other kind of reports prepared by the management, and the different summaries and documents. So these are the part of accounting information of the business or company. And what does it do? The accounting information helps stakeholders to make informed decisions. So with the help of accounting information, as does it include? The financial statements, and in the financial statements we have balance sheet, profit and loss account. In the profit and loss account we can know the income of the company. In the balance sheet we know the financial position of the company. In the cash flow statement we know how much cash goes out and comes in. So this gives important financial information to the users, and those users makes informed decisions with that information. And the users are owners, managers, investors, creditors, regulators, and sometimes different parties as well. So this is the concept of accounting information. What are the qualitative characteristics? The qualitative characteristics of accounting information is, first is reliability. So the information provided must be free from material errors and bias, and it must be represented faithfully, and that information we call is reliable. The next qualitative characteristics is relevant. The information have to be relevant. That is, it must be able to be compared with the past, present and future events of the company. In that case, the information will be relevant. The next qualitative characteristic of accounting information is understandability. That it has to be so precise, concise and understandable, and even simple, so that everyone can understand that information. So these were the three qualitative characters, that is reliability, relevance and understandability of accounting information.